You know that feeling, right? That quiet moment right before something really big is about to happen? Well, that's exactly what the market felt like today. It was like it was just holding its breath. After that amazing run of record highs, the music didn't completely stop, but it sure did get quiet. So, what's the deal here?
So let's dive right in. This wasn't one of those panic selling days, not at all. It was more a day of just widespread patience, caution, and stick with me, because by the end of this explainer, you are going to know the one big thing that has all of Wall Street just waiting on the edge of its seat.
All right, so first things first, let's cover the what. To really get the mood, you got to look at the numbers from today, August 11th. And what they show is a pretty modest step back across the board. As you can see, all the major indexes finished in the red. The Dow Jones, it fell about 0.5%, and the S&P 500 and the tech-heavy Nasdaq, they both dipped about 0.3%. Now look, these aren't dramatic, scary drops, but they do mark a very clear pause from those record highs we've been getting used to.
Yeah, this chart really paints the picture, doesn't it? This is consolidation, not a collapse. The market was just tapping the brakes, which is a perfect sign of that cautious feeling that was just everywhere today. So the real question is, what's causing all this hesitation? Okay, so let's switch gears from the what to the why. There were a few specific things hanging over the market, and they all worked together to create this atmosphere of, well, of uncertainty.
And it really all boils down to this idea of market sentiment. It's the collective mood, you know? The vibe of all the traders and investors out there. And today, that vibe was definitely cautious. It felt like everyone was just waiting for the other shoe to drop.
So, what fueled this cautious mood? A few things. First, you've got that ongoing trade stuff with the U.S. and China extending some tariffs another 90 days. Then, on top of that, chip stocks, they've been absolute market leaders, they kind of wavered a bit on some new sales rules. And finally, something really interesting happened with gold. It took a pretty big hit, and we're going to dig into that right now.
Now, to really understand the tension in the market today, we can just look at how two very different kinds of assets acted. It's really a tale of stocks versus gold, and it tells us pretty much everything we need to know. And here's where you can really see that tension. On one side, you have the big stock market ETFs. We're talking SPY and QQQ, and they were just kind of hanging out, holding steady near their record highs. But on the other side, you had the main gold ETF, GLD. It wasn't just pausing, it was actively falling. Big difference.
Yep, a 1.4% drop. Now, on a quiet day like today, a move that big in a major asset really stands out. And it happened because it was confirmed that some new tariffs wouldn't apply to gold. That little piece of news made the US dollar stronger, and a stronger dollar usually pushes the price of gold down.
And here's why that drop really matters. For traders, this was way more than just a bad day for gold. They saw it as a technical caution sign. See, the price broke below a key floor, a support level, which suggests its whole recent rally might be in trouble. It was a clear signal that people were getting nervous.
But all these things we've talked about, the tariffs, the chip stocks, that drop in gold, honestly, they were just the opening act. The entire market's pause, all that hesitation, it's really all focused on one single thing, tomorrow's main event. And that event is the CPI report. CPI is short for the Consumer Price Index. It's basically the government's official scorecard for inflation. It tells us how fast prices for all the stuff we buy are going up. And believe me, that number has massive implications for the economy and for the market.
And this right here is the key to the entire day. Everything we saw, the little dip, the cautious feeling, the weird move in gold, it was all just about investors getting into position for this one report. Nobody is making a big move until they see that inflation number. This is the reason for the big pause.
So that brings us to the most important question, right? What happens next? Well, depending on what that CPI report actually says, the market is coiled up and ready to move in one of two very, very different directions. Let's just break down the two paths. It's pretty straightforward. Scenario 1, inflation comes in hotter than expected. If that happens, the dollar could get stronger, putting pressure on both stocks and gold to fall. That's the fear scenario. But what if inflation is lower than expected?
Well, that could spark a huge relief rally for stocks, especially tech. And we'd probably see gold bounce right back too.
So today was the quiet before the potential storm. The market is just sitting at a crossroads waiting for one single piece of data to tell it which way to go. The big pause is almost over, and tomorrow we'll finally find out which path the market takes. Thanks for joining the Explainer.
Thanks for tuning in to Daily Market Newscap. If you found this update useful, hit that like button, smash subscribe, and ring the bell so you never miss a beat. I'll see you tomorrow with your next dose of QQQ, SPY, gold, crypto, and US dollar action. Stay sharp and trade smart.